Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. Markets in the green today as we speak, off the low point of the day at this point. Nifty 50 comfortably above 10,900 levels. Sensex 2 is up about a quarter percentage point and mid caps also in line. It's Bank Nifty which is really leading the chart, 0.5% up, and ICICI Bank has a lot to offer today and therefore advanced decline is also showing a lot of strength, Sonia.
Oh yes, but you know this key hurdle, 10,950, it's a level that this market has come back from 9 times in the past. So it's really a stiff resistance zone, and even today the market is not successfully taking it out. A couple of reasons for that. One, a lot of heavyweights like HUL, HDFC are under pressure. In fact, HUL comes out with its numbers tomorrow. Ahead of that, that stock is down almost about 1%. And not just HUL, ITC as well from the FMCG pack is under pressure. But let's move on to the big CNBC TV 18 exclusive today. We understand that the Etihad Group CEO Tony Douglas has written to the SBI chairman regarding Jet Airways restructuring. He says that Etihad will invest in Jet only at a price of 150 rupees per share. Lata joins in to give us all the details. Lata, over to you.
Well, yeah, it is a letter which states the conditions on which Etihad will participate. And the most important condition is that they will invest additional equity at a price of 150 rupees per share, because they believe that the recent gyrations are because of market volatility and not inherent. So they want exemption from the SEBI preferential pricing formula, which is 6-month high-low average. They also say that they will not in any way proactively pledge their shares for additional debt that will have to be raised. They say that, yes, of course, their bankers, HSBC and Mashrek, can be contacted, but they will not be able to help in any way, which is by pledging their own shares. Also, to come back to the SEBI exemption, they want written permission from SEBI on the exemption. They say their initial conversation with SEBI has been positive on this, but they want SBI to talk and talk to the Civil Aviation Ministry and get their nod as well. Further, after that, the letter also goes on to say that the airline company desperately needs money and cannot fund operations beyond a week, and even lessors are threatening to ground the aircraft. So there is also a sense of urgency. They confirm that they will release $35 million immediately once their conditions are fulfilled, and their conditions, as you know, are that the equity will be brought at 150 rupees. They have further conditions as well. They are saying that the other part of the resolution plan speaks of conversion of debt to equity. They insist that the conversion of debt will be of the bank credit and not the non-bank loan. That is, any loans given by Naresh Goyal and related parties shall not be converted into equity. Indeed, a moratorium should be sought from them, so that the loan is not paid for a bit till the company is on even keel. They also say that Naresh Goyal's role itself should be well defined and actually restricted. No board seat for Goyal himself. Goyal and his family should not be allowed to act on behalf of the airline. They want a 9-member board with only 2 representatives from Naresh Goyal and lenders. Otherwise, it should be a professional board. They realize that they will also have restrictions. Under Indian law, they cannot go beyond 49%. They cannot do creeping acquisition. Likewise, Goyal also needs to be restricted and should not be allowed to, and his stake should be restricted to 22%. And the representation on the board also restricted to either 1 or 2, along with the lenders. They want the board to be professionally controlled, not controlled by Etihad itself. It should be in line with Indian rules. Etihad will not be able to persuade HSBC, Mashrek to lend more. Therefore, Indian lenders will have to bring the remaining. That's the content of the letter. It does leave the lenders and Jet Airways itself in a precarious position.
Oh yes, Lata. In fact, thanks for giving us all the details. And Jet in a precarious situation, and therefore that stock lost over 6% in trade today. In fact, staying with that big development, remember that the ask price and the demands that have been made by Etihad also is of 150 rupees per share, and that's also the reason the stock price has really reacted. But staying with that, Jet Airways, we also understand that a resolution plan to really revive the airline could be in place as early as today, because there's a mega meeting underway today. Ritu Singh gets us all the latest developments from there. Ritu.
Well, yes, it's going to be a very important meeting given that, the draft resolution plan is in place and Etihad has now set its own terms and conditions on what it wants to be done for the resolution to be approved. It is, of course, up to all of the lenders to come to an agreement with all the parties involved for a final resolution to be reached. So, what Lata gave you was the Etihad's part of, what they want in terms of settlement. But what we're given to understand is that the draft resolution plan envisages that lenders will convert part of, the debt of 8,200 crore rupees into equity. This will only be done after the promoters and Etihad Airways bring in some cash infusion into the company, which will also then see Etihad raising its stake from 24% held currently. Now, to what extent that stake rises has its own limitations. We do understand that, we're aware that FDI under aviation permits foreign carriers to own up to 49%, and that too in a staggered manner is what we're given to understand. Etihad can increase its stake from 24%. Further, we understand that the bankers are very clear. They do not want the current promoters to continue. That means Naresh Goyal will have to give up his, management control, and his stake will almost halve from 51% to below 26% after the restructuring is completed. In fact, the draft resolution plan that has been circulated by the lenders also says that Goyal and his family will be allowed to have 2 board seats, perhaps one of them to his son Nivan Goyal. But as Lata was telling us, Etihad is opposed to this. They want those 2 seats to be either with Goyal or the lenders. Clearly do not want the lenders to have Goyals to have more say in the running of Jet Airways. The resolution will also, obviously have to be finalized by all the lenders today. So perhaps we'll have a clearer picture at the end of that meeting today.
Okay, well, we'll get to know more. But Ritu, since you are with us, there's some news on SR Steel that SBI is looking to sell its exposure to ARCs, to banks and to FIs. Tell us more about that.
Well, it's a very important development, Sonia, because, SR Steel, we've seen there's a very good offer on the table for lenders as far as, the ArcelorMittal offer that has been approved is on the table. The haircut involved in that deal is less than 25%. Now we're seeing State Bank of India, which is the largest member in the consortium, coming ahead and saying that they want to sell their exposure of over 15,000 crore rupees to banks, ARCs and asset reconstruction companies, clearly indicating, they're kind of fed up with the delays that are happening at the NCLT. They had even moved a higher court NCLAT to ensure that the proceedings are fast-tracked, and that is something we haven't seen now. Just the maintainability of the SR promoters' offer will be judged by the 31st, and only after that will Arcelor's hearing be started. So now we understand they've put this exposure on the block at a reserve price of 9,587 rupees, indicating a haircut of 38% that SBI is willing to take, as opposed to the recovery with ArcelorMittal's offer at 11,303 rupees, which indicates a haircut of 26%, much lower than what they're offering at. Of course, it remains to be seen whether Edelweiss or some of the other ARCs that already have exposure want to aggregate this further. But an important development nonetheless, that lenders are losing patience with the entire process of NCLT and the litigations that are involved with IBC.
Oh, yes, Ritu, it is a very, very important development. And as Ritu was pointing out, those numbers of the haircut in terms of recovery that SBI is ready to take. So remember, the time value of money is what the bank is really banking on at this point, and clearly shows that they are losing patience in terms of the recovery through the NCLT way. So that is one important development coming in. With that, we'll slip into a short breather on the show. But Z Entertainment as well as KPIT Tech reported their Q3 earnings yesterday. We get you the management commentary on the other side. Stay tuned.